Hello everyone, this is Teddy Keckstead from Forex Trading Unlocked, and we are here on May 29th, 2020 for the last trading day of May, and next week we'll be in the June month. Can you believe how far we are along in this year? And wow, what a crazy year it's been so far, not that anyone is not aware of that. So real quick, here's our disclaimer to remind you this webinar is for illustrative and educational purposes only. And real quick, we want to give you a plug here for the book High Probable Japanese Candlestick Patterns, available on Amazon.com in Kindle and paperback versions. Check it out when you're not trading the markets. It'll help add some insights that may give you a little bit of an edge in your trading. So with that, let's go to our www.forex-trading-unlocked.com website. And we already have the workstation page pulled up. We're going to go past the numbers and we're going to go straight to our Euro US dollar chart. So, as you can see this week, the market had an upside breakout, and now it is playing with critical resistance and an upside breakout. The key thing here is, are we establishing the upper part of the range now, where all of a sudden we're going to run out of gas and then the dollar kicks in strength? Seems to be this is how it has been going for quite some time. So we're going to key off of these levels here that we have at 111.48. So right now the market's trading at a 111.01. Now it spiked higher today, making higher move highs, playing with that resistance level, and now it's right around the 50% of its range today. So, and we are winding down the markets. European markets are closing, Asian markets are closed, and now we are, all we have left is what's going on in the U.S. for the next few hours. So we could end up having just a dead day. It could be done, or who knows, maybe the dollar is going to get a reversal here and start gaining some strength. Right now, you can see that this is right now coming back. So where there was dollar weakness being really pressed today, and let's take a look at the dollar index real quick. So since the euro is one of the biggest components, as you can see, the dollar index made a lower move low yesterday. However, but we're still flirting also with this low here. This is a big base for our consolidation for the dollar index. So if you kind of think about it this way, if we're going to remain in a range trade, flirting with this level where we are today is only going to probably put us back for another surge in dollar strength, but not necessarily dollar bulls, just meaning that we're probably going to hit the upper end of that range. So let's go back to the euro US dollar real quick. So as the dollar index is hitting support, the euro is testing resistance. Now, as you can see, that this had follow through, so the dollar index took a lot of heat today, especially because the euro is the biggest component in the dollar index, but now it's coming back. So let's see what the other biggest component is, the British pound US dollar. Now, we have one of our followers, Dooms Jake 1979 on Twitch, had some questions about the British pound, and we are going to, if I can put the symbol in properly, get to that analysis for him. So he's asking questions about opportunities that we have available here in the British pound. All right, so our upside breakout level would be this last swing move high, and then we have this swing low, which ironically was a high probable Japanese candlestick patterns that you can read about and learn about in the book that was mentioned at the beginning of this webinar. So this right here is a piercing line that set us up for a nice little bit of strength to kind of get an idea as to where that might hold up. As you can see this week, we've held this buy signal and the upward sloping support line. So today you can see over the past couple of days we've really gone sideways. So by attrition we could easily fall through this, and then I think we might have a test of this $20.66 level. But right now it's pretty neutral to higher, because we had made a lower move high with a higher move low, a higher move high, and now we're kind of going sideways. So if this market's going sideways, meaning that it's found support in the pound versus the dollar, that means that's probably about it for now for its pressure in the dollar index, which would help us to kind of gauge whether or not the dollar is really going to fall apart, or is it really just at the, now we're setting the range parameters for maybe even the summer. Like, we may not have a really trending market in the currencies for the dollar versus most the major crosses for the next few months. So as we ride out the coronavirus lockdowns as they open up around the globe. So let's look at the US dollar Swiss. And we're going to get back to the pound in a minute. Okay, so now the Swiss, as you can see, the US dollar, this looks a lot like the US dollar index, the same chart here. And I would say that we're most likely going to stay contained in this range now for probably the next few months. This is your major parameters here for the Swiss. You could even still use this little area here, which we came just shy of. But as you can see, this is just winding around, not really doing anything. So this is a little bit of a tough trade. So let's go back to the British pound, and we're going to look at that versus the euro. Maybe if I could put the signal in, right? GBP, EUR. So we looked at the pound versus the dollar. And we notice that it is holding neutral to positive. Now you see the pound versus the euro. Now this is where you have to figure out where is the strength. This is why I think that pound strength versus the dollar is going to be a little bit rough, because if the pound is weak versus the euro, and you can see that it's been trending lower, making lower move lows and lower move highs, not that this trend is not going to continue, but I think that this weakness, at least in the short run, is an indicator of this market being able to maintain a trend. So it has been sideways for the most part. You can see the ranges on any given day are pretty tight. But overall, what have we done? We've made lower move lows, lower move highs. And we kind of have, right here, it's really tight because of the ranges. We have a head and shoulders. Here's a shoulder right here. Here's the head, and then here's the shoulder area here. And then it took out this neckline. When it took out this neckline, that gave us our sell signal for this head and shoulders. This was a big correction in the market it had been in. So this shows pound weakness versus the euro. Also, the overall trend, remember, has been down. So here's our downward sloping resistance, holding this trend intact. So that means we have pound weakness with the euro. Now let's look at the British pound versus the Swiss. Now sometimes the cross is opposite, like it'd be Swiss pound or whatever, but we're just looking to try and find value with the pound and whether there's strength or whether there is not strength here. This had a similar type of thing go on with it here in the Swiss, where you have a very tight head and shoulders pattern. But then we had this little bounce here. We found support, and it's just going sideways. So I think that where the Swiss is very neutral, you can see that the pound versus the Swiss really has not changed much over the past 2 months. And if anything, it's actually holding support pretty well. So after this big correction that it had in March. So remember, this market was in a bearish way. And here's something that's kind of interesting. Look at what we got going on here. This market, just by attrition, is coming right to buffer up against this downward sloping resistance. So here's the high back in December, and this trend here, just by attrition, is going to hit this line no matter what, unless it goes down. So I would say definitely key off of this last swing move low. Remember, we have been making lower move lows and lower move highs. However, we've gone static here. So since we made this low, we made a lower move high, a higher move low, a higher move high. And today, I don't know if this is where we're at, but this sets us up for neutral. So the critical support is at $1.1722, and we're looking for a breakout to the upside here. So let's look at the British pound versus the JPY. And the reason we're jumping around the globe here just a little bit is we got the perspective of the US dollar versus the pound, where it's neutral to higher right now. Then we have the pound versus the euro, which is pretty neutral, especially in the short term, it's neutral to higher. Swiss, pretty neutral as well. Look at the pound versus the yen. This has been an overall downtrend as well. And this here was a big buy signal. This is why you got to look at other crosses, folks, because there's not just the US dollar. I mean, the pound is one of the biggest. Remember, the pound and the euro are the two biggest contracts traded next to the dollar. So there's always opportunities when there's different crosses here. And look at what's going on here. So remember, we were looking at, is there pound strength coming in somewhere? Look at what the pound did versus the Japanese yen. It already broke out to the upside with that trend line. So we're going to take this one over here, and we can put this one out like that. So there's still a ways to go in the overall long-term trend if you want to go all the way back to December like we did in the other contract. But in the short run, we definitely have seemed to have breached the downward trend. See, here we have also a head and shoulders pattern. So we have this shoulder here, this head here, and this shoulder here. Let's took out this neckline here, and we're bobbling right on it. So this pretty much, we had this little break, and this buy signal right here put a stop to it. So what we have here, this is a piercing line. This is another high probable Japanese candlestick pattern. Now this sets us up for this short-term correction higher, and look at how it took out that slope. So we breached downward sloping resistance, meaning that the trend is more neutral than bearish. Not that it's actually very bullish, because this is the weaker trend. The major trend would be if we get back above this $1.40 level. So we'll see what's going on here, but we are starting to see rumblings of pound strength. So let's look at the pound versus the Australian dollar. And remember, this is how you gauge strength in certain markets. Now look at this one. This one's been beaten up. This is on its lows. Right now, it's a total bear. We need to look for a buy signal. There's not much strength here. So overall, pound may have some gaining versus certain currencies. This one looks like it's still going to maintain its trend. However, let's look at this here. We could use this spike here. It's kind of erroneous because it's a little bit overdone from back in March. So let's look at the overall trend here recently. Oh, look at this. We are about to possibly breach downward sloping resistance. Could we have a short-term buy here? It's very possible that we could. So we'll see what happens. We don't have a valid buy signal yet, but this is giving us the rumblings that just out of attrition we might see some strength. So let's go to the British pound versus the Canadian dollar. So one more over here. Oh, look at what we have here. We have somewhat of a bottom 2 sessions ago, and then we have had a nice little turn here. Once again, we have this market is in a sideways to lower trading range, but look at this. Look at how steep this is. So today, if we close above that, we breach up downward sloping resistance, giving the pound strength against the Canada and the U.S. dollar, which is both in our North American trade zone. We have strength in the pound versus the yen, and also in the other European currencies to some degree. Now, it's not big, but there's how you evaluate pound strength. So let's look at the British pound, U.S. dollar once again. So now that we see what's going on, even though it's a tight range, it's positive. There is definitely pound buying going on. Now, the British pound has been getting beaten up, especially in the news versus the euro, because of all kinds of fundamentals between them. Remember, there's the Brexit that is still going on. So there's all kinds of things that you have to take into account there. But we'll be watching these things as we head into the summer. We're coming out of the coronavirus trade, which is the biggest thing to really, I think, pay attention to, because this variable has shaken the market so hard, all the markets, that now we are finally at a point where we may be able to start getting back to just the normal chaos that is the currency markets. Remember, these things are always all over the place, and there's always opportunity. And that's why we took a look at those other currencies for so long. Now, since we did go into the yen, let's go to across the world. Since we did the European currencies, look at this. This is why we look at other currency crosses for opportunities. The yen has been just a death trade for the past 2 weeks. Believe me, whether you're in options, if you're buying or selling options for the most part, for most moves, you just got chopped up. This range is deadly. This is tight. There's nothing. It's flatline here. I would be very leery. We had a buy signal here, and we came up to just shy of our target. Now, we have been holding strength here, so even though it's pretty narrow, we've made higher move highs, so we came down off this low. We came up to here, which was a lower move high. We pivoted here, made a higher move low, and then breached it to here to make a higher move high. So this will be our, look at how tight this range is. This is the containment for the yen right now. Like, I'm going to have to move this chart all the way over here just to make it give you a little more sense. So here's the range here, $6.73 to $8.10. That's tight for the way that the yen has been trading as of late. It's very deadly. This buy signal is still in place, except for one problem. Time, you have these signals, and if you read the book, it'll tell you how to trade these signals. But over time, it starts to lose value for your signal. Over the past 2 sessions, we have taken out this upward sloping support line that has been the base for this buy signal and this new trend higher. So now, is this bearish? No, not necessarily, because we still have making higher move highs and higher move lows, even though it's very tight because of the volatility. So that is indicative of what? A bullish trend. So in the very least, we're looking for a basing and a neutral type of trade here. There's loose versus the other currencies. So we're just going to say that for the yen, keep it to higher biased. Now, also in this part of the world, we have the Australian dollar, U.S. dollar, which this market has been in a nice corrective move higher for quite some time. And even this week, even today, it keeps grinding through resistance. This market's been a bull for quite some time. I mean, this market bounced back in March, set a correction, but look at the velocity. See how if we go like this, it came out, and this is where it comes that just because it takes out downward sloping resistance or upward sloping support, it doesn't mean it's going to turn the market. This one started to go sideways, as you can see, so it still kept grinding higher, and now we have this new trend, which once again, we're riding. It's just a sideways by attrition type of grinding rally. This is a tough one to maintain because you almost have to be long from down here and taking bigger and bigger risks to try and make a breach resistance. Where's your value there on the swap and other things? So it's a tough trade right now. If you're trying to sell into this, I would say wait for valid signal and confirmation. I mean, we keep on making higher move highs and higher move lows. So to sell against that means you're going against one of the major fundamentals of a trend. So if you want to do a counter trend trade, at least hopefully make sure you have a valid sell signal to give you a reason. So here we have New Zealand or Australian dollar versus the dollar and dollar weakness once again in that cross. And then we have New Zealand dollar also. Now, all these markets have buffered new highs today or lows versus the dollar, and now they seem to be bouncing. So does that mean that we're hitting a short-term turn in the market? Maybe. It's the weekend. It's the end of the month. We still may have, there's still 4 hours left in the currency market, or 5 hours left of trading. So while that's still going on, you know, I think that anything can happen. Be careful of sleepy summertime markets. We could all of a sudden have a radical move come this afternoon. But right now it looks like dollar strength, not that it's coming into the market, but dollar weakness seems to be waning on the day. It could be just because we're running out of gas for the rest of the day. So now let's look at the U.S. dollar, Mexican peso. So this market has been falling apart, and now it seems like it's trying to find support. I mean, it took out this head and shoulders a few weeks ago, and it's just been grinding lower, slowly. And this market was in a bear market for the longest time. It'll be interesting to see if this market is just basing now or if it's going to turn. It looks like it's trying to find some strength, but we don't have any buy signal going on here. The trend is now lower. We've been making lower move lows and lower move highs. We took out this key support also over here, which was part of our baseline for our head and shoulders pattern that we had. You know, so as you can see that this had been going on now for 2 weeks. But it's been a grind. It's been tough. So, but as far as buying into this one, I'd be very careful, even though I think the fundamental is still bullish, the dollar versus the Mexican peso, but that's just an opinion. It has nothing to do with the charts or the even the economic fundamentals right now. So it's tough. We may have over-exacerbated the rally when the coronavirus was in full swing as far as the trade, and that might be where we spiked, and that high may actually have been the buffer being like, that's it, this is extreme, no matter how bad coronavirus is in the US or in Mexico. So let's go to the US dollar Canada. And as you can see here, this market has probed new lows even today. But look at this. Now all of a sudden we have support. However, we made a lower move low after setting a lower move high. The trend here has been eroding and bearish now for a while. Well, it's been sideways. This was the first market really of the major crosses to set a range and go sideways, and now it's finally leaking through it. This was our base here, and as you can see, we took it out a few sessions ago. And that was the critical thing, because the question is are we going to stay below this baseline? Like, were we just playing with support, setting maybe a little bit lower range and then come back above it? We'll see. We have no idea. We have a gap that needs to be filled down there. But as far as support for this trend too, let's just say if we go back to here and we go to right here, look at this, how we're coming into this. Isn't it amazing how technical analysis works? So we have this gap down here, but we have this upward sloping line, and it has been the support for this rally, and this is a very even slope. So wouldn't it be interesting to see if we all of a sudden tag it here like we did today, close to it, and we turn and get above this $38.52, which I think is your key pivot. Above here, it's going to be tough to be short, especially if we take out this downward sloping resistance line. And as far as any real confirmation of bullishness, I would say your last swing high right here is the key at $1.40.5. Anything above there keeps us in a neutral bias, not necessarily bullish, but neutral bias. Now let's go take a look at a market that had been flying, and now look at what's going on. This is pretty crazy. This market has been in a trend, the US dollar, Turkish lira, bullish trend for quite some time. We finally had a correction, and then this week, a couple sessions ago, we spiked a new low, and now over the past couple days, we have been rallying. Now here's something I want you to take a look at. This low right here, when you follow it with this little pattern, the second day here, this is called a harami buy. Then after yesterday's trade, this is called a 3 inside up buy pattern. This is also a pattern that you can read about in the High Probable Japanese Candlestick Patterns book. And as you can see, we have a little bit of follow through today. We actually exercised this trade a couple days ago, and now we are long from 67.80 with a 67.89 stop, or $6. Excuse me, we were long from $6.78, and we have a stop at $6.78.98, which is just above our entry level because it is now a positive trade. And we're just gonna ride this one. We are looking for a correction to the upside, not necessarily turning this market around. This market may be overdone. However, the fundamentals, considering what's going on in Turkey, their whole system of everything is eroding over there. So it might be another reason why this trend has a good chance at not just correcting to the upside, but actually becoming a really big bull. So here's our first marker. This is our 50% line, and then here we're going to the 0.618. So off the top of our heads, to find a target area if this buy signal holds, and that's what we're gonna see. So let's get this wider here. Okay, now this is much clearer. So as you can see, we stamped this low a few sessions back. Next couple sessions confirmed our 3 inside up day. Now we have follow through today. So our first target now is $6. 0.9823 up to $7.0480. So this target range here would be just a corrective target. This is for this buy signal. This buy signal doesn't mean that we're going to maintain the bullish trend and all of a sudden skyrocket to all new highs. It very may well happen, but remember, this is our base right here. If we fail from here at $6.69.89 right here, this would be where obviously the correction lower is, and also bearish trend is in full force. So, but right now we have the stopper on it. We're looking for a correction just up to this level. Could we take out the high that was set a few months or a month ago, or at the beginning of May rather? Very possible. But right now we're not looking for that. We're just looking for this target area right here. So this is the area that we're looking at for a correction. Remember, now this could be a resumption of the bull trend. Now, here's what I want you to think about as far as this market. First of all, the spreads are very wide getting in and out. So this is for experienced traders and capitalized traders. Do not try and trade this market unless you have been trading for a long time and you're definitely aware of the risks. However, there is a lot of opportunity, but even getting out of this trade, you're going to be taking a hit on the spread. So just be mindful of that. The margins on this are anywhere from 5 to 8, 10 times higher than they are for most other currency crosses. That's another thing. So your leverage is a dangerous tool, and you got to think about what's your risk reward and your potential return on investment for what you're risking as well. But right now, for this buy signal, which is one of our biggest ones that we have highlighted in the book, High Probable Japanese Candlestick Patterns, we decided to exercise our trade and get into it. And now we are going to ride it out and see what happens. So with any luck, it's going to maintain its little posture to the upside, and we will see a nice follow-through rally as we get into the month of June. Can you believe that? We are at the end of the month. So we're going to go to the Euro US dollar where we started out this webinar. And as you can see, the market actually has started to come back a little bit for strength against the dollar. So who knows? Dollar's in flux. A lot of things are going on. We'll see what happens over the course of the next few hours. But remember, the market is winding down. We are headed into sleepy time markets. It's Friday, and we're at the end of the month as well. So a lot of balancing has been done already, but then you never know if someone's unloading at the end of the day, especially for what's going on with the stock market and how it's swinging around these days. So real quickly, remember the book High Probable Japanese Candlestick Patterns. Check it out and learn about those signals that we had covered in this webinar and how to maybe integrate them into your trading plan as well. So I want to thank you very much. Please